All right, so today is April 2nd. It's Good Friday, so the market is closed. And yesterday I spent a bit of time, um, as you can see, everything looks very colorful. I just changed the look of my charts. But anyway, that's by the by. I spent a bit of time marking out the zones with colors, with the bands. And as I did so, I kind of came to a conclusion that um, the 4 hour zones are not necessarily valid zones to draw. Um, but and that was only because if we look at this, I noticed that every time price went into a 4 hour zone, the reaction was never ever immediate. And it always, it could become very frustrating when you're waiting. So, case in point was my trade yesterday that didn't really work, that I didn't actually have the zones in. But if you look on any of these charts, what I used to do a while ago, and when I say a while ago, maybe about 6 months ago, was I'll draw these zones out and I would only take a trade when price came out. The other thing again is the idea is you would take the trade here and you would put your stop at the top of the zone. So this would be where your stop is. And now when you look at that, that distance to where you're exiting is 15 points, 15.2 points. So if you were looking for a 1 to 2 risk reward, you would need price to go about 30 points, which is way below this demand area, which doesn't give you a favorable risk reward. Now, if you look at the way Tesla had moved yesterday, it stopped exactly at that zone. In fact, it's actually going lower. Um, but you would need a lot more um, points. Again, if we look at that, just to kind of get a good sense of, Tesla only moved 24 points. So it just never gave you a good risk reward. And I would want to get into the trade early. But then, as you can see, if price is kind of going down and then it kind of went up, ticking up my stop, it now becomes difficult to kind of get in because your risk reward is so high. Um, and then I also now realized another problem, and that was the reason why I stopped putting the bands in because it started to confuse me when I was getting into the trade. I preferred having just the lines. So if we look at what we have, essentially this, and taking the trade when it hit the lines. But it wasn't very clear as to, oh, I wasn't very clear. Maybe the no, I found it very difficult to find an entry on those lines because I wouldn't really know, or I didn't really have a clear strategy. Now, one thing I know I have probably mentioned before, which I keep forgetting when I take trades, is it's not about the points. These points, whilst you're expecting price to reverse at these areas, you have to look for a pattern that tells you that price is reversing. And that's what I kind of have added but forgot to implement in my trading on yesterday. Yesterday uh, I took Tesla short from this point here. If I just use a circle, I took Tesla short on this point. Oopsie daisy. Let's just go back. Yeah, so I took Tesla short at the break of a trend line, which was kind of like here. And obviously the price, we got to a double bottom and price had uh, reversed. So it was around here and price had reversed. And I had to get out and I was in with 15 contracts. So of course I lost quite a lot of money, about $4,500. And I was very upset by it. And I came back and started trying to understand what had happened, where I went wrong. Obviously, the main problem or the main issue was patience or a lack of patience. Um, The issue with how I was trading is, I mean, obviously trading, these things happen, but first issue is going in with such heavy size. Secondly, not identifying a stop. But I didn't really have a good plan, a plan that I normally implement, and I had forgotten about it, which is before you get into a trade, you have to identify a trend. And if you are trading the reversal, you need to see the signs that the trend is weakening and signs that the trend is about to reverse. So let's use this as an example. So whilst, and this is why now actually I don't think I have an issue with drawing the 4 hours now when and we're going to talk, and I'm going to talk about why. So um, so we now have a trend. We're making higher highs and higher lows. In fact, it's a lot cleaner on this chart. Let's even look at the 15-minute because things look so much better on the 15-minute chart, so much clearer. So you can clearly see we're making higher highs and higher lows. But we're also wedging as well. We're losing momentum. The number of green candles is reducing, and the red candles are starting. Like you can see, the retracement is getting tighter. And then now what happens is you're expecting a break to the downside of this trend, which now tells you that the trend is ending. Then, and this is the part Al Brooks has really helped me with, then you now want a resumption, at least an attempt to resume the trend. Now, and I think this is very, very vital. In the past, I would get in here, put my stop at the top of the trend line, and I would get stopped out. Or even not even the trend line, the top of the last candle, and I would get stopped out, or even the top here. But this spike is important too. And this is why I now understand. I never understood what the spike was. And so I always looked for the second pullback. But the point here is you're looking for this, and this is where the 1 minute chart is very, very deceiving. Very deceiving because the trend itself is it looks better on the high time frames. On the 1 minute chart, things are so difficult to read. Um, and you have, in a sense, I think a 1 minute chart trader is only trading these swings, which is fine. If you're trading these swings, then your trend this is not the trend you're looking for. The trend you're looking for is the micro trends in between, and that works for the 1 minute chart. For the 15-minute chart, this is perfect. For the 5 minute chart, it's kind of somewhere in between. But of course, the 5 minute chart is the chart that we should be trading. So if we go back to what we're saying, the trend, you can see the trend going in, a break of the trend down here. Now the trend is attempting to move. And what happens here is you now have a situation where the trend does not, the trend, well, the trend fails because guess what? It comes back out, breaks the trend line again, and now you're expecting that trend to fail. I think I just said that twice. But you're expecting the trend to break, then you expect to see the trend try and go up to carry it resume. And as it tries to resume, you can see the trend is failing because the next high that it makes does not take out this high. And now this is definitely a reversal at this point, and this is where you get in at the break of this candle. And you can now put your stop here because now you're in a new trend. And at this point, this is where I should have looked to enter. I think the issue I had was I rushed in because I saw the trend had broken. Oh, I didn't even look for a trend in the first place. I just saw a break here. I said we're in an area of supply. It should definitely go down. But of course, that's not the case. The plan here is always look for this bit or this bit. Once you see this is the thing that tells you, okay, we're at support or resistance. In this case, we're at resistance. Now, we're looking for the trend to resume. Let's see if it can take out the next high. And it does. Okay, so we're still in this trend. This is a micro drop. So it's not taking out this point here. So the trend is still going. So if anything, this line, and let's actually leave that there, but let's draw a new one. This line should be here. And notice how it's parallel to this. So And that is also a good point, good thing. So this is the spike that I always love. I used to hate seeing this spike because I thought, oh my god, the trend is still going up. But this for me is the point of exhaustion. High volume on that spike. And that is the spike that I always look for. Always look for high volume as well. And then because you see the volume has pushed it all the way up to the top, but then it's almost like exhausted. The next one can't take this high out, and because of that, when this pivot gets broken, here is your entry, and there is your entry. Hindsight's 2020, yeah, but I think this is the point. I mean, you can see it here. This is how you know that you have a major trend reversal. It happens here as well. The only issue with this particular one is that you go into a trading range. So, as Al Brooks says, you either go into a trading range or you go into a reversal. So this could have been a trading range, and this here is a trading range. When this reversed, you can see it broke, but we didn't get that spike. So this was the attempt, and then this was the reversal. But it was a trading range. So this could have been a good entry here, but this is all you're going to get, unfortunately, because it is a trading range. So, and when it is a trading range, 50% chance it could go back into a reversal, or 50% it could come all the way back down. In this sense, it came back down. And that's another thing I need to add to my arsenal when it comes to trading. So I think now I am still okay putting these bands in and even the lines, but I think one thing that I need to add to my arsenal, and I not so much add, but I need to always remember is before you get into a stock, before you decide to buy or sell, look for this pattern. Wait for this situation to occur. There is no point getting in. So the first thing, and I've identified this so many times, find a trend. Once you've seen the trend happen, then you now look for a break of the trend. Then you now look for a resumption of the trend. And if it does not take that high out, or not if it, but if it can't make like here, as you can see, this is the trend, this is the resumption, and here it can't take the next, this bar can't take this out. This signal bar tells you you can go long, and you enter here at this point. But this is not support or resistance. It's a very bad area to get into a trade because there aren't any zones. So I would not take a trade here. If anything, this is a place to take a trade. However, you need, as you can see, price has gone down, but you need to see this trend fail. In fact, this is a pullback, so you need to see the trend fail. Like here, the trend is failed. There we go. In fact, what I really love about this is when I see the pullback do this, this already tells me chances are we're going to go down. We've tried to go up and we're not. And this, we already had one pullback here, drop, pullback, drop. So this would have been a good entry short as a trend continuation and sort of trading within the channel. The only issue is we don't know where this channel is. Actually, we do. This is the next part of this video, which I have noticed happens whenever price is moving. So how do we find this point where price will stop? Say we're here and we see this stop here and we're now in a training range. How do we find this point? We find it by this point. So if we take this, extend this pivot to this pivot, okay, and we obviously don't know where this is, but we have this and we have that. So I'm just gonna, okay, then we now create the channel. So we draw as channel and then we extend it here. Okay, so now this gives us, oh, actually we can also use this point as well. So in fact we don't even need that, but we could also do that. It gives you an idea of where the end is going to be. doesn't always work. But if we just take this, let's not duplicate. Let's remove this. Remove. Activate. So we have this pivot already, and we had a prior pivot here. So all we just now need to do is there. So now, when the trend hits this point, we know we should be looking for something to happen. Either price is going to go up or price is going to go down. I'm trying to make sure I got the pivots right. There we go. Yeah. So this already tells me we could go up with it, we could go down. It's probably not a very good method, actually, as I think about it. Maybe it's not the best way to do it. And I'm probably going to have to do some reading on that. Oh, look at that. This is parallel to that. That's a very interesting case. I need to check this, understand this, because from my understanding, price is truth, and price does it's not random. These things move as according to, actually let's use this time frame. So what I'm going to do is I'm going to remove all these lines, and then let's take this out, because you can get different trend lines in there, and then remove this one. So now we have this, which this is a reverse. So this is it. This is exactly it. This is the point. So remember when we said that we're looking for price to start weakening, we see a break of the trend. So we see the break, we want the trend to resume. Of course, pre-market is kind of, what I've noticed with pre-market is you need to compress everything because the price is so spread out. So you want the trend to resume, so you'll probably get price come down, and then it will make a double bottom and start heading back up. Now the question is how far back it will go. That's another question, because I don't know. This is my own speculation. I think we are still going down quite a bit. The only reason why is because I'm looking at these candles, and I expect, based on how Tesla has traded in the past, look how green, red, green, green, and then red, 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 red. I think this is a very strong red. So this is a smaller version of that. This should be a bit, maybe half of that. I think it's like 50% each time. This too is going to be, I reckon we probably have a very big reversal at this point, just like we had a big reversal at this point. So I'm expecting Tesla to still come down, but to pull back, maybe come back, pull one green candle, and then a few more red candles, and then maybe a green candle, and then a trading range like this, and then reverse. And then we have a flag. And usually when you have a trading range like this, 50% says it could go up or it could go down. It all really depends. We could still go down, we could still go up, we could even come back down here and then go back up. The point is we just need to follow the price and take our trades based on that. All right, I just needed to record that so I have that logged.